sure.
What do you think?
Well, this is my first podcast, and I think that's how you know you made it in life.
Yes, I meant if you're on a podcast, because it's actually very hard to do. Hardly anybody's doing it. It's brand new. It's a new format. They're learning about it, and they're rare. Podcasts are rare if we know anything. So if you're on one, you are doing well.
Automatically an expert.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, today is a different day for the podcast. We have a guy in the studio. Ryan's on vacation. And I said, hey, we can do this. We can make the podcast without Ryan if I could get this one guy in. And I was able, you might know him on Twitter as ThetaFarmer. We have Theta. He's in the podcast studio and he's here. So I'm happy to introduce him. And young farmer, lives about an hour away from here. And I'm looking forward to his insights on market direction and what he's doing. I have all kinds of questions. Anyway, he's here and he's ready to talk.
Yep, I'm happy to be here. Thanks for having me.
Yes, I this is a new format. This is going to be more ThetaFarmer. Wasn't around for the early way the grains used to trade. Would be considered the younger generation. On Twitter, there's a ton of people arguing back and forth every day. And Theta's in there. I mean, he's in there arguing his points. And I was just saying to him, when I first started, there was the only arguments that we would have would be on the phone and should we take our LDP and LDP advice. And I don't even know if he knows what that is, but we'll dive right in here. So the first question is, what do you see for the young guys farming now? I mean, what are the trends you see? How do you see these guys in the markets? And what is the focus of a young farmer?
Well, the focus of a young farmer is just being able to get started. For one, it's just so capital intensive to even get your foot in the door, unless you're born into it, married into it. Starting off on your own is pretty difficult to do. Getting into the marketing side of it, just to have the capital or a bank to back you and start doing a good job of marketing is a whole nother story.
Yeah, I agree with you. That's something we talk about often. Is finding a banker and a lender that understands the program and having the broker or your advisor and you all on the same page. There's bankers that give out marketing loans. I mean, it's not money that doesn't need to be paid back. Loan's a loan, but it's separated from your operating loan with the idea that if you're losing it at the commodity brokerage, that you'd be gaining it on your physical bushels. Of course, you'd have basis risk, and that would really be the only risk that a bank would have. But having a knowledgeable banker on this subject is half the battle. And I think a lot of guys don't even start there, or even worse, they try to fund a big hedge out of their own pocket. And I think you know how that turns out oftentimes.
Yeah, usually not good. And then on the other hand, they look for, the silver bullet or someone that's preaching answers all the time, and they blindly trust someone.
Yeah.
And they go down the wrong road completely from the start.
Yeah. I find that they get matched up with the loudest voices, guys that are out there talking or going out in the winter and hitting marketing meetings in town. And then getting guys started and going way too fast is a huge drawback. From what I see with you, though, you're kind of the rare one. You seem to have picked it up fairly quickly. You're able to apply it. I mean, this is stuff that I've witnessed from ThetaFarmer. You apply it fairly. You have a very solid knowledge depth of options. And you wanted to get that out to other guys, and you realize really quick, a lot of people struggle with what to put in a call is and how to apply them and what. But you're one of the rare ones where you're able to really see it clearly and apply it from kind of day one that I saw. You probably studied it in school, if I'm not mistaken, correct?
Yep. I had some classes in college and really got excited about it and knew like from day one that was something I needed to focus on to have a successful farming career. Then I got started trading. I actually got a loan from my parents. They gave me 25 grand to fund an account, which I'm very surprised they did looking back. Quickly paid that off as soon as I could. And then, just kind of started farming soon after that. And, kept using my process. That's worked pretty well given the couple markets we've had in the last couple of years. Not every strategy works every year or every month. You have to adapt to it. But, just managing risk and using some things I learned through college and real life experience helped a lot.
So you were able to have those marketing classes and then actually apply that knowledge, because oftentimes when you get there and your emotions get in there, that really messes guys up, and that's a very common tale. So you were able to take those classes and actually use some of that knowledge right off the bat?
I would say a little of it. A lot of it was just theoretical pricing or how to model things, which in the real world isn't quite practical. But actually being in the markets, trading your own money, you learn very quickly.
Yes, without a doubt. I tell guys they probably have about a 3-year learning curve, and then they're a little surprised at that. But really, you need to see a lot of different looks. You have to see different markets. You have to see something that's never happened before to really fully grasp what the market's capable of. And I still go with, if you didn't trade the 08-09 wheat market, you really honestly haven't seen much yet.
Right. I'd still say I haven't seen much.
That's
for 5 years.
That one was a special deal. Cattle's, interesting this year. It's cute, but nothing compared to the $3 moves that were very common minute to minute, really. Yep. At the heyday of it. Dewey got in there and bought a whole bunch. A broker out of Omaha or somewhere. And he bought a bunch of wheat overnight, $200-300 million worth of wheat. And then they liquidated it the next morning when the clearing firms found out. But that wasn't even it. There was $6-7 difference between contracts of the same year. Or the same crop, like March and May, Minneapolis wheat was $6 apart, not 60 cents, $6. And then there was generational spread traders on the Chicago floor that were wiped out, in days, in minutes. And it was something. But the thing is, you need to see this, go through it, and then you realize what the markets can do. And that really helps with, and you touched on it, the risk management is where I think a lot of guys struggle. And really, that's where the balance you got to find between hedging and risk management, I think, is probably one of the most difficult. I'm in the camp where I want to trade my hedge. I don't farm, but I would want to try to maximize everything, where you'll have another guy that will want to stick with it to the very end, saying a hedge is a hedge. I have a guy that hedges perfectly. Like, he knows his exact numbers. He will buy futures to lock in his insurance premiums. He down to the last dime, he knows exactly what's going on. Doesn't care if he has margin calls here. He knows where the numbers are going to land. My mind could not possibly work that way, but I do see everything. And some guys do think like that. You seem to be a nice blend of a few different things, but I know that you like the implied volatility and selling volatility. So you're in the more advanced option side of stuff, and that's not where you need to start. You just need to find your rhythm, what fits for you. I like spread trades. I like to follow basis and cash markets. And then you like the implied volatility, and it works really well for you. So that's part of hedging, is figuring out what your strong suits are, and then, like you say, constantly work on it. I think that gets lost a little bit, is like you say, they want to subscribe to something and have the answer. It doesn't take extensive work every day, but I would say it takes a little bit of work every day, doesn't it?
Yeah, absolutely. Always checking your positions and what markets are doing or major headlines that are moving things. I'd add that one of the most important things is to know how to manage positions. Like, if you're a farmer, you need to know how to manage your crop, your employees, your agronomics. You also need to know how to manage your positions if you're putting stuff on. Like, I'll put a trade on and I already know when I'm getting out before I put it on.
Yeah.
So,
yeah, I like that. One thing I've taught guys, and it's saved them a lot of money over the years, is, let's say you sell a call for 16 cents in beans. or 30 cents. And it gets down to go in with the idea that most likely you're going to not get to 30. You're going to get 28, 27. Just in your mind, have that number. Because what happens a lot is it gets a move that goes the opposite direction, and you bank, or you don't bank the premium until you get out. So you have this comfortable cushion, and there's 3 cents, and it's like you got 3 or 4 of them on, and it adds up to almost $1,000. And you think to yourself, well, that's $1,000. I'll just get it. There's no way soybeans are getting up there. And it has a way of not working out that way often, soybeans. So anytime you have a lot of time in soybeans, I teach guys to get out. Then that's back to your management. Like, just don't expose yourself to risks that you don't need. And a lot of times you get busy in the field, you get away from it, and you kind of just forget you have it on, and it's so far away. I don't have to worry about this. And then things change with a couple announcements. And then what was, 3 cents is now 33 cents again. I had one guy with a philosophy, if it gets up there, I want that hedge anyway. But, you can reapply it up there. You don't have to ride it.
Time and get out another 30 cents.
Yeah, you do not need to ride it up. So it's just, it is about managing. As a matter of fact, I even thought about starting an app as reminders, like having a certain percentage of the option gained. Then boom, you would get a reminder. I probably just gave away $1 million. Oh, there it goes. There goes the idea. But no, it is something that really seems like it would be easy to do, but you need to manage it. So yeah, you do that very well. You can't forget about your positions. And then what advice would you give to the farmer that's trying to get into marketing? I meant, it's a zoo. I mean, you get a lot of guys telling you they're the best.
Yeah, you get pulled in lots of different directions. If you're going to just do one thing and just get your feet wet, I just look at open an account and follow the seasonals for corn. Just sell a call in May or June and just watch it. Just watch what happens. Sell one, keep your size small. Just watch how it works.
Yep. And do not look at cumulative seasonals, the free ones online. You have to look at contract specific ones. When you blend, cumulative is the blend of all of them. Oftentimes July and November beans can be $1.50 apart. You can have 2 different markets, 2 different time frames, and you start blending that, you'll get the seasonal. So that's the one thing I pay for. I don't pay for anything besides the seasonal stuff. And I do 2 different companies that I like. I think just changing that one thing on the farm alone probably would really benefit you, especially on corn.
Absolutely. Yes.
Soybeans a little bit trickier, but corn is one where it's very black and white.
Yep.
And I feel like the news at the time, it never fails, will tell you it's hot and dry, or somebody's doing something that's going to make corn explode soon. And it's the right time. And then you listen to the news. Yeah. And I think that's where a lot of people go wrong. I think you don't seem like a guy that listens to a lot of news, that you trust your own gut. Maybe I'm wrong, but that seems like you're more of everyone's lying to me. I need to make my own decisions, because that's what I think. Call me paranoid. I think that the middle guys are trying to make more money. So the information you see for free is exactly what the middle guys want you to see. And I don't think that it's changed even from the DTN days. If I'm wrong, then everybody's bad reader, because they seem to be on the wrong side of the market by reading more news. I don't know if you agree with that.
What's that phrase? Read headlines or trade headlines.
You'll sell papers.
Papers.
Yeah. So Twitter's good for that. I think that was Momar. Actually, he goes by Momar. That I think that's in his tagline. It is true. It is. Guys think that they're looking for this. If I could just find this information, the right one, and they constantly subscribe or bounce around to brokers, they're looking for that one thing, and it's really changes every day. And it's this, you need to find a good guy that will be the filter for you, that can really cut down your work. I think they're worth their weight in gold. But they're hard to find. They're not going to be looking for you. I don't feel guys that are doing well are looking for people that want to learn. Because there's just no benefit. And that's one of the problems with the industry is if you are successful, you tend to be a little bit secretive about it, and you're boastful. I have a soft spot for guys that want to learn, because I don't feel like there's any good resources. What are some resources that you found useful, or if any, online? I found none.
Yeah, that's a tough one. There's always bad actors out there. MSG Capital is a good follow if you want to learn about options. Grain Stats puts out some good data. Karen Braun. Just looking at the CME website, just scouring that, looking at data.
I see you're along the lines. I'm a numbers guy. I like Karen Braun because she puts the numbers out. And there's not a lot of leeway. Just I like the black and white stuff. That's why I like seasonals. I like the less opinion, the better. I also like ideas though. If a guy can put out ideas, there was a guy I loved. His name was Chuck Levitt, Aileron. This is like the beginning of online trading. Anyway, so they would they'd put out, they had a gold guy and they had grain guy, but Chuck Levitt knew what he was talking about. You could actually read what he said. It was specific, and then you could make money from it. Since Chuck retired 15 years ago, I
find him.
Yeah, I'm looking for my next Chuck because I'm open to any ideas that do well. Like the more ideas I have, and of course they're not all going to be 100%, but still, it's really in between compliance and other things. It's really hard to find it. You need to find a good guy. I think that's like a real base where you need to start if you're learning. There's probably some good online resources and courses I don't know about, but again, most of them end in selling you something, I would say, right?
Yeah, there's usually a paywall. So
yeah, it's always been a good boys club. Always, ever since it started, way before the fake news, way before everything. The guys in the know are in the know, and the guys that are on the outside, just you're not part of that club. And I don't think it's changed at all. I think on stocks, there's enough resources there that you can do your own homework on something on the financial side. But I think to this day, it's very hard on the marketing and farming side to find that online. But I'm curious to hear, I want to hear your outlook on where you think we're headed for corn and beans, because we got 3 months here. They tend to be extremely critical months for marketing. What do you see over the next 3 months?
Yeah, it doesn't look good, honestly, just with how much uncertainty there is. There's unknowns about tariffs coming into effect on April 2nd. The 40A tax credit expired for blending biodiesel. 45Z has a bunch of unknowns around it. There was a new thing I saw. It was like 301 policy on shipping fees for freight that isn't U.S. ships. That'll be a huge disruption for shipping corn and beans.
Yeah, not a fan of the clarity that's going on right now with all the stuff that guys need on the import-export market. They need this information. They need to be kind of reassured where we're going here. That's not fun for anybody, including me or you. So hopefully the clarity improves.
Yep. Hopefully
we get some answers as we go towards April 2nd. But I see it as a very difficult period with a March 31st report right by the tariffs. So it's like I sit here, I should clean my office, but I sit here and wait because I think that's the mode that everybody's in. I meant you have a lot on the line because you don't know if this 460 price is going to disappear. Now, it used to be 489 not that long ago, but you're really boxed in here the way I see the producers. What are you going to do? How do you know what to do? It seems like we don't have any of the answers we normally have. Last year was really easy, and I say that it was easy to make a choice. It wasn't easy necessarily to do it all, but at least you had the choice, and it was pretty black and white. This year, you have none of the answers that you need, and it could change a lot in a couple tweets or bad spring weather, or bad summer weather. But it's one of those markets where I don't know what you can do. What do you see? What do you like better, corn or soybeans? I mean, what's for the outlooks?
Oh, to be bullish something, I'd say corn, just because I'm so bearish beans. But just with how much uncertainty there is right now, I'd much rather prefer using options than straight futures for anything.
Yeah, I agree.
That's out there.
Yeah, because it's going to change, and I've been in options, and it's even when you're going the right direction with your option, be it a put or a call, still incredibly difficult to get the money out of there. It goes that direction 2 days, and then it's just this perfect market for longs losing, shorts losing, calls losing, and puts losing. And how is that possible? Have this market that we're having. That's what I'm seeing. It's just you have to be very nimble, and guys are, but still in a ridiculous amount. Like you have to time it perfect, minutes minutes can matter. And then you get these breakouts and you feel like, oh, here we go. And then it's just completely the other direction. There's just no rhyme or reason, a lot of money flowing around. And, you know, a lot of these guys, they complain when the money is selling it, but they don't complain when it's buying it. I think, where do you think the funds are going to, which really the answer where we're going here, which way do you think they're leaning anymore? I know they've got negative wheat and beans, and they've really trimmed back their long position. It's hard to tell where the funds want to go.
It was really interesting coming into this late winter. They were almost record long, if not record long.
Yeah, it was crazy.
For corn. But they knew these tariffs were going to get hit on. Everyone knew that. And then all of a sudden it sold off when the tariffs were announced. So,
you know,
the rumors sell the fact, and they weren't ready for that.
It did it last time too. It was in April or May. I was going fishing. I remember, because anytime I go anywhere not here, market mayhem breaks out. I was on my way in the air to Vegas when the Russian-Ukrainian war broke out. Not landed, not the next day, in the air, of course. 3 hours in the air. That's when a big giant war breaks out. And when I opened my phone, I had at least 25 messages between texts. And then Brexit, I think I was going fishing that next day. And of course, that was like, whatever it is, I'm a magnet for that. But I remember distinctly I was fishing. Beans were climbing up into it the whole time. And then they announced it, and then it went down for the next whatever number of months. So it actually did the same thing. Yeah. You know, we did the woulda, coulda, and shoulda. Yeah. You could have bought all you wanted April puts in corn for like $37.50, and they ended up being about $1,500 each the next day. So it's completely surprised even the smartest option market maker out there. They just didn't believe it was going to happen, and then it happened. Yep. I was on the wrong side of both spreads, and it definitely happened. Yep. You know, so so you definitely don't like beans, but you like corn. I feel like if it's planting delays, that it's going to be sensitive to that. And I really thought it was going to be super sensitive, but now with the funds not maybe long corn, or maybe willing to get long corn again, it really has this huge question mark around corn. And I get calls on corn every day. Should I buy calls? What should I do on new crop? And nobody really has any answers. I don't have any answers. It just seems like one of these markets where everybody's in the same boat, and we just have to see what happens. Yeah,
I'm kind of in that camp, just waiting. Most years we seem to trade a weather market. You know, demand is rather constant, but supply is the unknown piece.
Yep.
This year I feel like we're just trading a policy uncertainty market. We just have no idea what policy is going to do.
Yeah, the policy, I have a feeling policy is going to play a big part in this direction. And notice I didn't say up or down, because that way you can't be wrong if you don't say which way.
Trump's cryptic tweet, what do you say? Get ready to sell a whole bunch of production inside the U.S.?
There was two things in that tweet that tells me that, hopefully there's a plan, is that he did mention we're going to sell more than ever domestically. And then he also said, have fun. I really don't think he was mocking people. Other people will maybe disagree. But it seemed like there must be some sort of plan here, or at least that's the hope. I mean, I think that's what everybody's hoping for, no matter what side of the aisle you're on, that there is actually a plan. Because in my mind, we've been trending the wrong way with policy, you name it, forever. Like we keep stacking it up. Every once in a while, there's a Russia-Ukraine deal, or there's a weather problem. But Minneapolis wheat just keeps stacking up. Kansas, even when we're not planting it. Like, that's the canary in the coal mine. That's where corn and beans are headed. Corn has probably the best outlook with the domestic demand being what it is. What are we, 14% of corn is export sales, where beans are heavily dependent. I think it's up 65%. So corn looks like the future, but we can't all just grow corn, which is what we're going to now everybody's leaning that way because of what you're talking about. Yeah. Now we're all going to plant corn. So there goes that life raft. So what do you think is the answer for ag and going forward, what should be a common goal? Let's just start there.
Common goal. I mean, I feel like a lot of farmers feel like this holiness that they think that their business needs to survive and deserves to survive because they're holy and righteous. But it's not always the case. I mean, look at Blockbuster. They went the way of the dodo bird.
Yeah, many businesses.
Right.
Yep. So it is a different attitude. I noticed that because we grow food, this should be this price. Now, I'm not willing to get anywhere near that debate. I watch the 5 minutes I scroll Twitter, I see enough of it to fill me up for a long time. But it seems like there's a lot of infighting, a lot of different groups fighting for different things. It doesn't seem like there's a commonality, and this is speaking from an outsider's perspective, any sort of commonality to work towards any sort of policy that's going to help anything that I can see, but I might be way off.
I catch a lot of flack for this online, supporting the carbon pipeline, but that would be a huge boost to agriculture. That'd bring another ethanol boom. It'd be the ethanol boom 2.0.
Well, what kind of support outside of ag do you think there is for that?
The clean environment people would love it on paper.
Yep.
Outside of that, not much.
And it seems like maybe with this administration, that might be on the back burner. All these
absolutely.
policies. Not that it's going to go away. Things change with different policies, different politicians. Even midterms could change things. But it does look like that probably for the next 4 years, that's not going to happen. I would guess. I know locally around this area there was one proposed. Do you know where that is sitting right now?
Let's see. For the jet to ethanol plant, there's one going up in Moorhead.
Okay.
But they're going to turn corn stover, so corn bales, into ethanol.
Yeah, and then the biodiesel, all the stuff they're building up around Fargo or near in North Dakota, like all this. You heard the hype. What's happening with any of that? Where
actually
we
helped
stand?
a lot. I mean, in the last trade war we were in, normal bean basis was like $1.80 to $2 under cash.
Oh, without a doubt, this is helping this area.
Now it's only 80 cents under. So all the crush demand has helped dramatically.
So where does the meal go?
Great question.
And should we start a hog operation around here? Is that?
You go first. I'll run the numbers for you. You do the work.
I know it's a bad idea. I meant it just cannot be a worse idea, but it's got to go somewhere.
Got to go somewhere. Well, we'll need another. What came first, chicken or the egg? You need to process them too. Or are you going to send them?
Yeah, it just seemed like we were going that direction, and by now we're supposed to be out of beans. We're going to have to grow 100 million acres, by 2026 or something silly. And now we're not going to hardly plant anything, and it's going to be too many bean acres. So it'll be interesting how that works. I had that one client that does the hedging like a calculator. He often said that it's going to be policy that you get these big directional moves in ag, and that's what's going to be the next one. What direction we actually finally go here. And the last one we had was definitely 2008. When I remember that night, he got up, gave the speech on ethanol. It was kind of a surprise. And corn was up that night, and it was just off to the races after that. So that was the last big one I remember. But I don't know if that's coming this time. Trump says it's coming. Yeah. He says there's huge plans, but I kind of agree with that producer that the next big move, and that's why I want to be really careful with the marketings. The next big move's probably going to be on the policy side of stuff, but to this day, it is truly a mystery what that could even what it's going to be. I mean, I have no idea.
I'm going to keep my eye out for long-term leap options. A leap option is considered more than a year for corn calls, because I think this ethanol boom 2.0 is going to happen. Yeah,
so like maybe after when all the bad news is factored in by like a year and a half's worth of time.
Yes, yeah.
I'm a long-term option guy. Ryan's, who's out of town right now, he loves short-term options, and when they work, but oftentimes you're going to watch them fade off into the sunset. I love time. I love low implied volatility with a lot of time.
Yes, that's key.
A lot of these guys, and we see it on Twitter, they think the whole thing about hedging is catching the top third price. Like, you need to know what to do to even get in the zone where you can get that top third price. I don't think that's what hedging is at all. You're looking for these opportunities. Like, I'm tracking soybeans right now. Everyone hates it. Funds short. It's never going up again. These are the markets where I look for that implied volatility to go low. And then the day like Chinese cancellations, when they really kick it right in the face, something where it's just down and everybody's giving up on it, that's when you buy as much time as you can for something reasonable. Like I'm more of a dollar amount than strike price guy.
Sure.
Like, I don't need to have 10/20s because I want to go 60 cents in the money. I want a vehicle that's going to get me there, not lose any value hardly, no matter what the price does for a few months. I want this free look at this market and wait for things to change. And you'll find in commodities often that it does change. And you'll say to yourself, man, I can't believe they were giving those 10/80s away for nothing. We're at $14 right now. But you also have to find the markets that do that. Everyone loves to go to corn. And it's just like, first of all, the implied volatility is way high. Corn historically doesn't do well with calls. I mean, I don't have the stats to prove it, but I know from enough experience that when things move, it's generally beans. The options are chronically underpriced, puts and calls, where it's almost the exact opposite for corn. Wheat's an interesting one. That's all over the place. I mean, I've got wonderful deals in wheat to where I can't believe I bought that option for that in wheat. That one's all over the board, where I think beans and corn are distinctly different. I think beans are much better, but I love that. I love as much time as you can get when everybody hates it the most, because it changes. Without much time, it changes in grains.
Yep. So my name, ThetaFarmer, implies that I'm farming theta. Theta is the time decay portion of options. So that's generally my go-to strategy of just constantly being short options and collecting that time premium.
And this is on bushels that you have stored on the farm, or how are you doing it against bushels that what are you using that against?
Yes and no. I'll use it against my bushels depending on the time.
Give me your IRS answer here.
Yes, I have two accounts. One for hedging, which I report as hedging, and one for speculating.
Of course, this is what you have to do. We run it by the book around here.
Yeah. So the key to playing that game is to keep your size small, because if you trade big, size kills if you're on the wrong side. And if you're not diversifying, I rarely ever short soybean options just because implied volatility is lower than corn most of the time, if not all the time, that I've traded over the past 5 years. And it's just statistically, it's done pretty well for me. So that's what I stick to.
Yep. I like when corn, in their defense, when corn calls do hit, I mean, it can be great, but it's just, go look at the charts. It's not that often when that happens. And sure, you can pick up 10, 15 cents, but if you're buying for heat in the summer, in my opinion, I'm buying bean options this year over corn. Of course, it's not on the hedging side of stuff. I'm just talking about when you need a vehicle and it gets hot and dry out. I don't think beans are going to be lagging if it's all burning up. Generally, you'll see beans completely freak out and just go $2 over whatever it was spread wise before the heat came. And it's just it's what I look for in front of a summer. We haven't had this look actually for a few years, where really they have given up on everything. The corn's still hanging in here at a price maybe it shouldn't be because of the front, but still nothing's going higher. This is the first summer or going into a spring where it just feels deflated. The other markets were coming down from more bullish fundamentals, where this one's starting off behind the eight balls for wheat, for beans, corn. I'm gonna give it a few more weeks. A bad report, and corn's gonna be in that camp too, where they've just given up on it before we've even started. So you need to really switch gears, and that's where I think a lot of guys get mixed up. They keep doing the same thing every year. Like
every year is different. You got to trade every year different.
Yeah. Not only that, it's not all here either. It's like you need to know when to store it on your farm to your advantage versus 1 year versus another year. And that can be dollars in an amount. Like I feel like guys build storage, they spent money on it, and in this area, gosh darn it, we're going to use it. And that's
some cost theory kicks in.
Yeah, that's the language that's going to be used around here too. Gosh darn it, we're going to use this bin, which is totally, completely not where you want to be. You want to know what tools to use and when to use them. When to use the elevator. When to use the elevator programs. When to use your bins. When to use the futures here. And like right now, normally, a lot of guys maybe would be writing calls, at a time of year. This year, that seems like a terrible idea.
Yeah.
We're last couple of years. You need to know when to switch gears and how to get there. And that's one of the things that you do. It's not all here, and it never has been. As a matter of fact, most of your gains probably are on your farms, just making better decisions there, right?
Yeah, it depends on how you do the math, but yeah. That's it.
Yeah, and to complicate things even further, every farm is going to be completely different. I have one guy that doesn't want bins. He just wants to do everything on paper. I have another guy, because of where they grow their stuff, they have to do almost everything on paper. They can do nothing forward contract. They just don't know what they're going to have. So you just have everybody with a different situation. That's why I don't think newsletters work very well, just because you can't box everybody into that. So what it comes down to is good old fashioned hard work and really figuring out what you need to do on your farm. And I think that's where guys get lost in marketing, that they work hard farming, they're doing what they need to do, and they just don't have that time or energy or even want, in a lot of cases, to try to figure this out, which is incredibly difficult, where a lot of people, they're not being not truthful. It's just old information. It's not going to work. And they get frustrated hearing that it's going to go up, then it goes down. They tune it out because there doesn't seem to be an answer out there. I think that happens to a lot of people in marketing, that it's just easier to not deal with it than deal with it. I mean, is that,
right,
you think you see that on
100%? Yeah. And then a lot of guys just have a fear missing out of, let's say you sell your corn, the numbers made sense. You sold in, say it was a early summer rally on drought risk.
Yep.
Sold, nailed the high. Then winter comes around and there's a drought in Brazil too. Now they're worried that they're going to miss out on the next rally. So they're scared of being hedged because they're going to miss out on their neighbor making twice as much.
And
wasn't hedged.
I feel a lot of guys take the path of least resistance. Like, I'll just do it at the elevator because the grain's going there anyway. You know what I mean? Like, right. Yeah, it costs 3 cents, but I don't know. It's not out of my pocket. It's that, it's like, when you get everything in a mortgage all together.
Interest costs.
Yeah, like
costs.
It gets bundled, and it's like, I'll just not think about it. But I believe if you know when to roll your contracts in the most beneficial time frames, when to, like I say, there's nothing wrong with the elevator, when to use those programs, those double up programs, when to use this stuff to your benefit. Of course, it might not work out that way. No one knows where the markets are going in front of a summer, but still, I find that guys that diversify those choices seem to do the best. In other words, they don't just all cash market.
Right.
They don't just all do everything hedge to arrive. If you figure out a nice blend for your farm, I think that's the key. What I like about this business is that you can re-own it fairly quickly with a phone call. Yes. So those decisions don't feel so final. You get these bean, if I buy them, the bean courage calls, then when it gets there, it's very easy to make a marketing decision. I think it's a lot harder than what people make it out to be. But I also think it's a journey guys can get there. I've seen you do it. I've seen a number of guys do it. A lot of guys do it. And then I've seen a lot of guys sputter at the beginning or take way too much risk. That's the biggest one. I'm almost insistent on way too small of a size to start with, because you have to be used to the way the stuff moves. It'll be a disaster if you're not. Not only that, you have to be really comfortable. I feel like a guy said at endless marketing meetings, they feel like they should know what all these words are, and they're not embarrassed, but they nod like they understand, and they really actually don't understand what they're getting involved in. So again, that's why I have a soft spot for guys that actually want to learn, because I've seen what happens when they do learn. It's just a matter of this getting used to the markets, like you say, and then start applying it. You're on a very fast curve. I don't remember you learning a lot of hard lessons that I can remember, but I'm sure you have.
Yeah, I think it was the worst I got beat up was the summer of 23, where that rally came out of nowhere. Yeah, I was already short. I shorted it too early there, and that beat me up pretty good. Otherwise, I tried to stay on the right side. There was a good book that I read, and it was like Fastest Loser Wins.
Okay.
Just getting out fast when you're wrong helps a lot.
And I think that's what the floor traders do when they talk about levels, that opening 5-minute range. There's a lot of different old floor stuff. They talk these levels, and everybody confuses that with the charts. And it's not. It's in their mind. They know what levels it's going to go through. You need to let it go. Yeah. And so I think that gets confused a lot. The old floor traders, they would bid it, throw it away, and just get their rhythm going there. It's that is the number one mistake I see, hanging on to just really bad losers, knowing they're losers, and then starting to surf the internet or the radio just to start hearing what you want to hear on your positions. But it's easier said than done. I just got waxed in bull spreads right off this tariff thing, and I wanted to stay with them. And I just decided in between what's going on, just be on the sidelines. It's just like, you're going to get beat up.
Yeah, absolutely. Cash is often a good position to be in.
But this is where hedging gets into that gray area. It's like when to give up on your hedge and when not. If I was farming and I was hedging, I would try to get myself into situations where I had covered risk. So let's say I'm short futures. I would be I'm going to get a cheap call just in case camp, give up a little more of the bottom line. Let's say it was 480 futures that you shorted. I'd still want something on for summer to my worst case scenario covered, but I'm a kind of a cautious guy. Or do you get out when it gets hot and dry? Like, this is not easy stuff. I'm not saying it's easy. It's a lot of people do a lot of different things. What's your personal philosophy? Like, mine would be, if I'm going to have exposed risks for a summer, I would want the upside reopened in some fashion before I got completely short, because of the things that pop up. But that's just me. What do you like? What are your personal things you like in a hedge?
I like to react kind of after something happens.
Okay.
If that makes sense. Like, if implied volatility spikes, that's when I come in and really start getting heavy on the short option side.
Yep.
Or like when the trend starts to shift, it's obviously you don't know that it's actually flipping from an uptrend to a downtrend, but I like to wait till the trend shifts down to start shorting.
Yep.
I don't like to fight it. I don't have money to fight billions of dollars of capital in these markets. So.
No, and that's where guys argue with the USDA's numbers and the funds. And I fight the funds, and I shouldn't. You just hop on that ride. I think you need to track what they're doing. They're gonna. In the summer 2012, the one drought year, it was way drier than this already. Didn't rain. Didn't even get close to raining during plantings. It flew in, but in that year, the funds hated grains. They hate them. They sold that every day until the day they couldn't anymore, which was the exact opposite of the seasonals. They sold it into the third week in June, in the one true drought year. So they really dictate where prices go for the most part until fundamentals will take over. So it's really important to hitch your wagon to what they're doing. It is. That's why I'm confused now, is because they really don't have a play. They're sort of short some grains. They got kind of a long position of corn. So I'm lost there. Seasonals could be either way. Like, oftentimes it goes up into May, oftentimes it goes down into May. There's not a lot of helpful information now, and that's why I watch a lot of Vegas Matt. I mean, I'm trying to figure things out, but it's sometimes sometimes the markets aren't like that. But I agree, the funds are super important to follow. If a guy's gonna start, where do you think is the most important thing to learn? Is it the elevator? Learn better at the elevator. Learn better in the futures account. Learn better in like rolling cash and basis account. Where do you think the journey begins for a guy?
Oh man, starting from square one.
Yes,
man.
Which is where a lot of people are right now.
Yeah, I would find someone you trust, someone that's willing to help you learn. Open a futures account. If you're already farming, that's great. Eventually, you will just have to trust someone that knows more than you and accept that, and then learn from them.
Yep, like a mentor type. That would be nice enough to help you.
I think the safest route would be to start at the elevator. You can use someone's advice to work at the elevator. I wouldn't trust someone that's at the elevator, I guess, because they want your grain.
I've always likened it to going to the IRS to get tax advice.
Right.
I don't know how close that is, but it seems like, I don't deal with elevators, but that seems like they're not trying to harm you, but what's in it to help them? They're trying to buy your grain to resell it at a higher price. It's a business. Yeah. But I don't, of course, every elevator is different and they all have different abilities, but I don't deal a lot in that world. So
I would start small too. You don't have to do your whole farm, obviously, with any one strategy or one system or with one broker. Just keep your size small until you get more comfortable, get your feet wet, think you know what you're doing, and until you see the results and like the results. And then once you just keep learning, you won't stop, and you'll just grow from there.
Yeah, and I think you mentioned it. I like the blend of stuff, diversify. I agree on the size. I think that's super important, not to start off way too strong. And I like spreads. I like options and then outrights. I think that you need to go a number of different directions and have like if you're just an option seller, I mean, you're going to run into a market that is going to hurt you.
Oh, yes. Yep.
Yep. If you're a blend of a lot of different things, I think that's the way to go. But I also think that that's hard to start that way. Like you can't be a master of all trades right off the bat. So it's ever evolving too. I mean, it makes it very hard when I felt like since September, this has been an inflation numbers game and it could do anything on any given day. So it's never easy, but I was kind of interested on your insights and what you thought where a guy should start there. So we'll kind of wrap it up here. Theta, I'm sure he's got Twitter battles. From what I understand, he's in a number of battles. As a matter of fact, I think he's made a podcast. Yeah. Besides this one,
this isn't my first podcast. I was considered a worthy adversary.
That's
on another podcast.
Well, I think that's a compliment. If it was me, I would take it as a compliment. I don't hear him talking about my Twitter account, so you are a worthy adversary. So I'm sure you have battles to fight, and we're definitely going to have you back. You're going to get busy farming. Ryan's undoubtedly going to go on vacation again. And without that, we'll hear the feedback. Anything that you want to hear from a young farmer, Theta is your guy, and it was very, very fun having him in the podcast studio. Even though one of the panels fell down while we were talking, it just scared me. But other than that, I felt like it was a lot of good information, and guys should listen. I didn't want me telling guys I genuinely wanted to hear what your experiences were. I've seen positive things. I'll leave it at that, but I think if they listen to you, it will be helpful.
Yeah. Thanks for having me. This was a lot of fun.
Yes. Have a safe drive back.
Yeah.
Besides
I guess
this one,
this isn't my first podcast. I was considered a worthy adversary.
That's
on another podcast.
Well, I think that's a compliment.